Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a running flat ABC where wave C did not take the low of wave A before continuation of the bigger trend, as we then have an impulse to the upside, a finished three-wave corrective structure, for now another impulse to the upside that is not yet finished. A running flat is, however, very rare. The most common flat pattern is an expanding flat. Then you have a regular flat, which is more of like a sideways structure, but wave C does take the low of wave A, and then a running flat, where as mentioned, C does not take the low of wave A. Also, for a wave C in a running flat, most commonly the golden pocket is the target for then a reversal taken from the low to the high over here, but this one retraced all the way to the 886, pulled from the low of A to the high of wave B, which is very deep, leaving a double bottom over here, which is always interesting to at least keep in mind. And also we have a Bybit wick to 23.6k. Now wicks usually tend to get filled, but of course as price is moving towards the upside at the moment, that is not so likely. If we look at this being the low and this move to the upside, we're thinking about a double 1-2 scenario over here. Now I have seen charts where they are counting a wave 1 over here, followed by a WXY sideways correction for then the green 2, in my case, over here, for then continuation to the upside. However, I do not like this as a WXY because a W and a wave Y in a sideways corrective structure, WXY, are not allowed to be the same structure. This over here looks like a zigzag family pattern structure, and also wave Y then has to be a zigzag in an ABC, meaning W and Y are the same or a similar family pattern structure, which is not allowed, and therefore I have a double 1-2 on my chart, wave 1-2, 1-2 continuation to the upside in a bigger wave 3. If we look at this wave 3 to the upside, then we had a little bit of a hiccup around the 1.618, which is exactly what you want to see, with the fibs taken from the low to the high of 1 to the low of 2. And now we are ranging on top of the 2.618. After also here we had this big wick candle, right, rejecting at the 2.618, but now we're ranging on top, which increases probabilities. Price will move to the 3.618, which is sitting at 36k. And what we also have at 36k is a nice extra resistance area between 35.9 and 36.2k. Now, if we are going to enter eventually a wave 4, then currently the wave 4 targets as it stands, if the potential 3 is in, as it stands, the target is between the 236 and the 05, which is between 33.1k and 30.8k, with the invalidation being the 618, as you do not want price to go this deep for a wave 4. However, looking at how this structure is forming, preferably this is another 1, 2, and then a 3, 4, 5, finishing 3 at like 36k before the 4 starts. However, we quite easily know if 4 starts because wave 2 here was about 9 days. So most commonly wave 4 will take longer than 9 days, as a wave 4 tends to take longer in time than a wave 2. If we then zoom in to the 30-minute chart and look at the bullish scenario that I have on my chart over here, then I have to go to a picture from perse in Discord. Thanks for sharing as well. He came up with this idea and asked in the group, hey, what are your thoughts about this one, where he has an ABC in yellow, which is a running flat, and then followed by the orange 1, orange 2, and then continuation to the upside. Now, first things first, an ABC is a 3-3-5 wave structure, so a little bit of feedback, of course. This has to be a 5-wave move, but the idea is correct. And then you have this wave 1. Now, if we zoom in over here, then you can see that this 1-2 is very short in time compared to a big 3, big 4, big 5. So preferably, I then move all the pivots one high to the right. So this orange wave 1 moves to the right here as well, and that is then your bigger wave 1, which is what I have on my chart over here. So basically we then have wave 1, 2, with 2 here being an expanding flat, then another 1, 2, 3, 4, 5 in 3, correction in 4, move up in a wave 5, which then ends your wave 1 over here, and all of this is then part of your wave 2. Now the fibs that you see on the chart taken from the low to the high of wave 1, and these are the common target areas for a wave 2 between the 05 and the 786, with the 886 being a rare target for a wave 2 but common for a wave B or a wave X. But for a wave 2 we already hit the 05, which would be sufficient. Of course, we do have some additional support below price at the moment, the blue target box over here between 33.8 and 33.9k. The fact that this is an expanding diagonal, however, in a wave 1 is lowering the probabilities of this scenario. Also right on top of a running flat, which as mentioned on the high time frame is rare, but also on lower time frames in general, a running flat is not common. So a running flat followed by an expanding diagonal wave 1 has low probabilities at the moment of playing out. But of course, it is a good scenario to keep in mind. Thanks for sharing, and I do like to share it with everyone on YouTube over here. So I hope everyone also appreciates that. So let's go to the medium time frame bearish scenario and then slowly zoom in with the bearish scenarios, where in the bearish scenario, we're not safe yet. We are looking for a 3-wave structure in an ABC expanding flat. Most common target for B is where we are ranging at the moment, taken from the high to the low of A, with a less common target being the 1.618, which, guess what, is sitting at 36.2K. So 36K, 36.2, very, very, very important for then potentially this to be a 1, 2, 3, sideways 4, 5, and then a move to the downside. And that's actually a mistake, because this has to, of course, be a 3-wave structure in this scenario over here. Just testing if you're awake, I suppose, where in this scenario, of course, a wave B has to be a 3-wave structure, not a 5-wave structure, where we're looking here for a wave A in an expanding diagonal. Again, not as common, but something we have to keep in mind. Wave B retracing to the 382, taken from the low to the high, which is a common target for a wave B. So that is fine. Less common for a 2, but common for a B. And then we're looking for a wave C to the upside and then a 5-wave structure, which based on the local price action we have over here is very unlikely to be finished. Preferably we see at least another high to take the double top. The 1.618, less common for a wave C, but still a target nonetheless at 36.3 to 36.4K. So also again in interesting area, and then you want to see a move to the downside. Now if we zoom into the lower time frames and have a look at the bearish but eventually bullish scenario, we are looking for, well, potentially a triangle over here. It is not the greatest, but it is at least the one that has the probabilities of playing out first compared to other micro scenarios I shared in the previous video. So if you want to see these, make sure to check out the previous video. But in this scenario, the triangle has will play out the quickest, basically time-wise. So in this scenario, we then have an A, B, C, D, and E is either already in or soon to be in before then continuation to the upside. A couple of things over here is that wave C is in this case a WXY double zigzag, which is fine for a wave C. 4 out of the 5 waves have to be a simple zigzag, which is an ABC 535. One of the waves can be more complex, which then tends to be C or D with a double or triple zigzag. Well, we have a double zigzag over here. And also wave E can be a triangle, but because C is already complex, wave E has to be a zigzag in this particular scenario. And that is the struggle that I have at the moment on the lower time frames. If this is the high of wave D and we are looking for E to the downside, then E has to be a zigzag, right? 535, but I struggle to count a nice 5-wave structure in this particular scenario over here. 1, 2, 3, very 3-wavy, unless this is a 1, 2, 3, 4, 5, where we are looking for a bit of an expanding structure, where this is your wave A. Then we are working now on a wave B. Before then, a wave C to the downside to finish wave E, looking at this support area over here, the target box, which is between 33.8, 33.9K. So that is definitely still an important area of interest for me. Again, zooming out in this particular scenario, wave E does not have to touch the lower trend line, the AC trend line. Actually, most commonly, wave E either undershoots the trend line overshoots the trend line, or does not hit the trend line before reversing to the upside. If price takes this high, the triangle is invalidated, at least if it does this at the moment. If price dumps to the downside taking this low, it's also invalidated. But at the moment locally, this is definitely an area of interest for me, the target box. Now if we then quickly go to the 3-minute time frame, something that I rarely ever do, I do want to show you something, because I've been updating a lot about this range over here today, where I think this is important. If we take the volume on the chart as well, what you can see is the highest volume of this move to the upside is basically in the highest candle over here. Now, if we think about an impulsive continuation, you eventually want to see a wave 4 and then a wave 5 to the upside, and wave 5 being made on lower volume. That means that if this is a wave 4, then you don't want the wave 4 to retrace too deep. And that is something that I always keep an eye on. So in this particular scenario, you can see that I have two pulls, one from here to here, basically the beginning of the high volume candles to the upside to the end. And you can clearly see that if this would be the low of a 2, 3, and we're looking for 4 or 5, well, wave 4 hit the 0.618, invalidating a wave 4. So this pull is definitely not okay, decreasing probabilities that this move down over here is a wave 4 for then another wave 5, increasing probabilities this is a wave C for a move towards the downside, towards the target box. I do have another pull over here on the chart, which as you can see is from these two pivots, from this low to this low, and I just do it just to be safe, let's say, just to have a little bit of an extra bit of room for the 0.5. Also here you can see the 0.5 has been hit, ranging on top of the 0.5. The 0.618 would really fully invalidate this being a wave 4, but again, probabilities are already decreasing for this to be a wave 4 and increasing for this to be a wave C, just because of the move to the upside and the deep retracement we have at the moment. But we do have CVD going quite nutty over here locally. Higher lows on price, lower low on the CVD. Let me quickly do a refresh here for you guys as well and zoom in to this structure. So first of all, we do have a lower high over here and a higher high on yellow, a little bit of bearishness over there. And let's see if we can actually spot anything locally. Well, at the moment, there's not too much going on. Price here moving towards the upside. Of course, we have those bigger bullish CVD divergences. So yeah, potentially we take this high and take this high. And when, well, we take it from there, right? For me, still area of interest, target box at the lows. But in general, if we zoom out again and we look at this range, probabilities are high to take this double top. We are in a bullish market structure trend. Shorts are higher risk, longs are less risk, quote unquote, right? Make sure you have a good plan and strategy, and you want to wait for price to reach your areas of interest. Don't chase price, don't follow price, wait for price to come to you, check the boxes of your entry requirements, and then you can enter. Now in this scenario over here, we also have divergences, bearish and bullish. Bullish one over here is the most recent, where we have a higher low in price, lower low on the CVD. But yeah, it's basically the bearish CVD divergences and the bullish one is countering one another. So preferably either or plays out, or what I would like to see is price moving down, hitting the target box, have a bit of a bounce, retracement, create some new fresh bullish CVD divergences very, very locally on like a 15-minute time frame, and then take it from there. So if we then go to the probabilities of the different scenarios, then on the medium time frame and the low time frame, the bullish scenarios currently have a higher probability unless bearish signs are going to show on the lower time frames. But at the moment, in general, that is also what I wrote over here. In general, the probabilities are higher to take these highs at least once more, where I will also be looking for the 36K target box over here. Just make sure you also watch out for a fake out over here, where you grab the highs and potentially close below, move down a bit. But in this range for me currently, I'm still looking for this target box as well, which is a great area of interest. And then observe the reaction, of course, see if we get some proof of support, because if we don't, we can look for lower prices. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.